Okay, hey, how you doing? Welcome to the final hour of trading here on March 21, 2022. It's Monday, and we're getting ready to close the market for the day in an hour or so. See what happens this week. It's Monday. Been an interesting pattern here. We're down 366 on the Dow, unfortunately. We're at 34,388. The low was 341, so we've been 40 points lower than this. So about a 400 point drop. But in any way, at the moment, that's where we're at. 365 drop on the Dow at the moment. Now, other indexes, just double checking a couple things here. We're down 27 and a half on S&P, and we're down 154 on Nasdaq. The Nasdaq is the big loser, 1.1%. The Dow 1.06%, kind of the same, and then the S&P 0.62. So it's a little bit of a tie, I suppose, I guess, between the Dow and Nasdaq for lousy performer of the day. Okay. What else is going on here? The VIX is up 0.8 at the moment, up 3.3%. Not really that negative, actually. So kind of weird. 24.68 on the VIX. That's pretty still reasonably low for the fear index. That's okay. Anyway, there you go. That is the story. Now, other quotes. Let's see what's going on. I'm just double checking my messages here. Stuff's going on all over the place. Okay, we've got. There we go. Thank you. 39 thumbs ups. Where's my thing here? Don't mind me. I'm just disorganized. Okay, I'm back. Okay. Rocket Lab down 22 cents at 884. It had opened nicely. It looked like Rocket Lab and SoFi were going to make classic W's today. They were going to do this. They were up at the beginning, then they went down, then they came up, then they went down, and then they were going to go back up again. And you'd have a perfect W formation. But they got the down. Rocket Lab went down, went up, went down, and now it's kind of meandering down here. So unfortunately, Rocket Lab did not want to play this game, and neither did SoFi. We have traded 2.5 million on Rocket Lab. The low of the day, 877, the high of 921. We've only had a 44-cent spread on the stock today, very tight. And we're what do we do? We started as a high of 921. We're now sitting at 884, and the low is 877. So we're not going very far here. SoFi 950 right now, down 37 cents. We opened this morning nicely at 993. Looked like we could take a shot at 10. Never happened. Went to the low just after 10 o'clock to 933. Kind of came back to about this 973, the middle of the W. Then we backed off again to 938, and now we're only at 949. So 34.4 million, quiet day. 34 million is not a heavy day for our stock. So interesting. GameStop is the only winner other than Spire. It's hanging in there. Smart rents up a little, but GameStop, quite notable. Opened at $90. Got up to 99.40 by about noon. It had a first rally to 96.60 or so around, what was that, Bruce? It was around 11 minutes after 10, so just after 10 o'clock. It went to 96. Then it backed off and hit the high of the day of 99.40, and it did that at around 12:20 today. And it's been down ever since. It's been a slow decline. But we're still holding a 213 gain at 92.92 on 3.4 million shares. Now I'm showing at 93. So there it is. Interesting on GameStop. AMC 1533. It had been up all morning. Gotten through the first 3 hours a day pretty well unscathed. It was kind of riding along here at about 16.25. And she gave it up, and she dropped down to 15.28, almost $1. We're down 47 cents right now. We're at 15.35, so we're near the lows of the day here. So she was up half a buck, now she's down a half a buck. Matterport 817, down 10 cents. This is trying to come back. The shares were as low as 78 this morning, 788, got up to 840, and then backed off only to about $8, and now it's 817 again. So it didn't go back to the low of the day, 4.8 million. Maybe Matterport can climb out of this. Only needs a dime to break even. 23andMe down 11.5 cents. Held its own. Got the high today of 379 around noon today, and then right after noon, it dropped off. Now I'm gonna interrupt this little quotation thing here and just tell you what I think happened here. And I'm just confirming it with the Dow. Yeah, look at the Dow Jones index right here. Okay, so this is the opening up here. Okay, we started okay, then we drifted along, but then we had that. You see that right there? Zzz, and then zzz, that right there is a quote attributed to the chairman of the Federal Reserve, Mr. Powell, where an indication was made. He might have purposely said it to kind of get it out there, or he was asked a question by somebody, or in some context, somehow, some way, he intimated that maybe, possibly, it could happen. Maybe just possibly, we could have a meeting in the next, few months with the Fed where we don't raise interest rates by a quarter of a point. We could do it by half a point. Zip, down went the market right on that little thought right there. A 1/2 percentage point rate increase. Zip, down went the market. Do you guys care whatsoever if your banker's prime rate is 3.25% or 3.5% in a year? Like, do you give a crap? I don't. I don't know how the markets would be. I don't know how the markets would be worried of a major economic failure for an extra quarter point here, or even a half a point more. Like, we had two 1/2 point increases instead of two quarter point increases. I don't care. But again, here's the problem with some of the folks in the market, and this is just a reflection on how this world is run now, and also who's running things. And that is that we're now watching the reaction to comments like this from Powell by people who are in their 30s and 40s, managing trillions of dollars of money. I'm talking thousands and hundreds of thousands of people, maybe millions even. The problem is, if you're 40 years old right now, you were born in 1982, all right? You weren't an adult until 2000, and even then you were 18. So come on, what were you at 18? You were crazy. It took another decade. It took until 2010 before you were 28 years old, and then you may have grown up because you came out of college. You stopped having to binge drink parties and all that sort of. I'm just generalizing. I'm not pointing at any of you in particular. But what I'm getting at is, old farts like me remember the days of high interest rates. I'm 66. How many guys do you think my age are left that are still active in the business of the markets, in the business of bond funds, in the business of managing mutual funds? Guys like me have been shown the door 10 years ago and before. We were shunted out with the new kids who came in behind us. The thing is that a lot of these 40-year-olds and 45-year-olds, they weren't adults the last time we had high interest rates. They don't know what the world is like, and they're afraid of it. They're afraid. They're nervous. And old smarty pantses like myself just kind of look at these kids and go, they don't know jack shit. They know jack squat about what the world was really like at that time. And we had to contend with inflation at 12 to 15%, interest rates at 10, 12, 15, 18%, 12% unemployment and getting worse, governments running out of money and printing money that they didn't have. We had complete calamitous situations going on simultaneously all over the place. Right now, we have no unemployment of any significance. We have people being able to get a job at the drop of a hat. We have demand outstripping supply. We have interest rates well below inflation, which is an anomaly. Normally, it's the other way around. Inflation is usually trailing interest rates. One crushes the other. We have free money being lent out by almost all bankers, especially on mortgages. Mortgage money is free if you compare it to the cost of inflation. If you compare the cost of what you would pay for a mortgage against the value of your house and the replacement value of your house, you'll find that you would be an idiot not to buy a house right now at a good price with this cheap money, because the house you're trying to build, not in all areas, there's some areas that are overheated, I get that, but in certain areas in the US and Canada, you can buy a house for less than it costs to replace it by a significant amount. And this is where you can win on this game. So this is where the world is at. But these 35 and 45-year-old money managers don't know, or let me say, cannot relate to the possibility of an environment where we have higher rates. And here's the kicker. Okay, you've probably heard the term called normalized interest rates. You've probably heard this term from time to time. What is a normalized interest rate? What that means is that the rates now are not normal. They're below normal, very below normal. They're like young Frankenstein, abnormal. Okay. We are talking about the fact that normally in real life, up until 20 years ago when it was a normal world, it was still goofy, but anyway, if you had 7 to 10% inflation, you had 6 to 10% interest rates for loans. You had mortgages of 8 and 8.5%. You had personal lines of credit at 9, 10%, and you were a good risk. You had car loans at 9 to 10, 11% if you had to get your own car loan. You would have car companies offering you 4.99% financing, and you would look at that as the bargain of bargains. Why? Because inflation is 7, 8%. Next year's car will be 8% more expensive, and you can buy today's brand new car with all the bells and whistles for 4.99% interest. You're stealing the car from the car maker, but they're desperate for the business because desperate times call for desperate measures. We don't have anything like that. We don't have anything like that. And these current guys can't relate to what I had to relate to. And I wasn't a money manager when I was 20 years of age. I just a punk out of high school, now in college, trying to figure out a way what I was doing when I grew up, becoming a watchmaker. And my dad was the guy who had all the pressure on him, wondering what to do and how to do what he had to do, and carry a family of 5 as a traveling musical instrument salesman, 2 retail stores, and a failing heart. The guy was this close to stroking out at any time, and he had a 20-year-old punk kid going to school. And are you kidding me? If he'd have passed away when I was 20, our household would have been a basket case. It would all fallen onto my mother, and now she would have to find a way to carry 2 retail stores, a household of 4 as a single mom. Are you kidding? With 20%, 18% interest rates and 20% inflation and 12.5%, 14% unemployment. You try to run a retail store when there's 14% unemployment, nobody has any money to buy anything. Now try and run a retail store. Yeah, good luck with that, mom and pops out there. Anyway, that was the world. These current people today, it's not their fault. I'm not mad at them. I pity them. They don't understand what it was like, and they may have studied it. Yeah, you went to school, but come on. When you went to school, you didn't study as hard as you said you did. You didn't do that. You partied until it was Friday night. Oh, come on. I mean, come on. Who are you kidding? Look at who you're talking to. Okay, there you go. We're down 311 points on the Dow. It's not a disaster day today whatsoever. We're down 0.89 of a percentage point. Whoop-de-freaking do. But the reaction to a comment from the Federal Reserve that we might have a 0.5 point increase instead of a 1/4 point increase makes the market drop 250 points in half an hour. Shows me The absolute lack of experience at the high end level by people in charge of a lot of money. And these are trigger happy, 8-second attention span money managers. The worst kind you could ever have. The worst. You do not want to have an 8-second attention span money manager managing your trillions of dollars of retirement funds, pension funds, mutual funds, hedge funds. You really want to have someone who has that longer term cast iron stomach that just says, I'm not flinching. Kind of like a Kathy Woods and kind of like a Warren Buffett. People right now look at Kathy Woods and go, oh, she's crazy. She's losing her investors all kinds of money. And then you look at Warren Buffett and you go, he doesn't do anything. He just sits there and holds his stock all the time until he buys Allegheny Reinsurance for $11.5 billion in cash. Oh, and by the way, Warren Buffett controls $170 billion in cash. That's much cash he's got right now. Cash. He doesn't borrow money from anybody. He's not going to have to worry about higher interest rates. He can buy assets cash. And he's asking himself, I'm sure, with his advisors, what could we buy with $170 billion that'll give us a better return than, say, a 10-year U.S. Treasury bill? Well, wait a minute. What is a 10-year U.S. Treasury bill return right now? Well, 2.3% a year. Oh, I can get 2.3% on my money if I buy a treasury bill. You know, that's the best rate in a couple of years. Yeah. But if we buy Allegheny instead, we can get way more return than that. And so that's what we'll do with our money. We're idiots holding U.S. Treasury notes, especially at 7-8% interest rates. A 7% inflation, 7% inflation and a 2% note means you lose 5% of your money. So watch Warren Buffett start to invest his money now. Very carefully, logically, strategically, he starts to pick up assets. I think he owns, was it Burlington Oil and Gas? Who was it that he bought the other day? He bought a big chunk of one of the huge oil and gas companies also last week. He has a bigger chunk now. This guy's putting his money where the action is, where the returns are. The returns are not keeping U.S. Treasury rates in your portfolio. That's what's going on. But today, obviously, after 12 o'clock at one point today, a whole bunch of money managers decided to sell stock and put the money into T-bills because the Federal Reserve might raise rates by 0.5 of a point in a month sometime in the future. Maybe, possibly, I could do that. Idiots. Absolute morons. They're costing their customers millions and billions of dollars in returns. But, hey, it's only money. It's not their money. They studied in school. I went to economics at Harvard. I went to Princeton. I went to whatever. I'm a genius. No, you're not. You're a moron. You don't know what you're talking about. Because you have no experience in real life. You're experienced inside the money management business. But you didn't listen to the guys who were there before you because you thought they were old farts and you wanted to replace them and get the fancy job yourself. And now you're handling all this money and you don't know what you're doing. And this story is a common story across the investment business. Do not be fooled. Quick story from my end. I was in the offshore investment business in the Cayman Islands for a couple of years, and I had been interviewed for this job by a fellow who was kind of just a little younger than me, but only about 5 years younger than I was. I was about, oh gosh, no, we were about the same age. I was about 42, 41. He was about 39, so, and he knew his stuff. He's a smart guy. Family business. He'd been brought up to be in the financial business all his life. Father was a senior banker. He really knew his stuff. Anyway, I got hired to work in the branch office in the Cayman Islands. And little did I know, and I had no way of ever knowing because this happened at light speed. But I got hired to start in January of 1998. I was interviewed in August of 97 and moved down there in January 98 and started working because it takes 4 months to get your paperwork done when you get a job in the Cayman Islands. You have to be approved by the government. You have to apply for the employer has to apply for the employee to get in and all this crap. Anyhow, I get down there, and I'm supposed to work for this one guy who is he's about 35. He's about 7 years younger than I am, and he was more of an operations guy. He wasn't really he wasn't like myself, a former broker, hands-on with clients kind of guy. This guy was more admin. It turns out they had a sales manager down there at one time, but that manager either quit or got let go about in the last 6 months prior to them hiring myself. And by the time I got there, they announced to me, "Oh, we have a new manager starting next week. We found a new manager to take over the branch." And I'm thinking, "Oh, I don't know who this guy is. Never met me. I've never met him. No idea of the philosophy of this person. Blah blah blah." Turns out that the guy I'm going to work for now is the youngest brother of three brothers who are owning this business. He is the recent graduate from college, and he's 23 years old. And they're putting the 23-year-old youngest brother in charge of the Cayman Island branch. And I'm 42. I've forgotten more than this guy knows. The number one salesman was 39, 40, ex-British Marine, really good guy, hardworking guy, super classy fellow, worked his tail off. He and I hit it off instantly because we had the same work ethic. And then there were two other guys who were looking for clients that they could just milk commissions off of, and they were just happy to be there. And that was the office. and we're now reporting to a 23-year-old guy who's reporting to his older brothers in head office. And this is how businesses are run from time to time. And I would not have been too thrilled had I known that this could have been the situation, because the 23-year-old had never been involved in the business before on a day-to-day basis like this. And so he was making phone calls all the time back to head office to be told what to do and what to say. And the number one guy that worked in the office and myself, we hit it off, and we would talk to each other quite a bit privately, and we would just shake our heads and go, "This is ridiculous. We're being run by a kid who doesn't know anything about the business, and will never be fired for incompetence because he's the son of the owner." And we're looking at each other going, "This is not what I signed up for. I want to work for someone, actually. I don't want to work for anybody. I want to work with someone who's a collaborator to help us build a business. This guy, we can't go to him for any advice. He can't give us any. He has no advice." And we found out that on weekends, this young man really enjoyed himself. And, well, why not? He was single, and he would be out enjoying himself on weekends, because he didn't stay home on Friday nights and read books on financial theory. He was out there getting it on. And what would you do at age 23 in charge of a branch office where you can't be fired and making, gobs of money because dad is going to pay you now? Unbelievable. So there are times where firms get turned over to unqualified people, and bad things can happen. And we found that in some ways, I and my cohort found that we could get away with murder because he didn't know any different. And in other ways, we couldn't do practical business proven ways to build our business because this guy thought he knew more than we was, because he had the title of manager. And it would just drive us crazy. It was much more of a distraction and much more pain in the rear end than anything else. And so what I found, on a personal level, I found that my clients would want me to help them they'd be in North America. They would ask me, "Can you help me do these 10 things?" And I'd be able to help them with one of the 10 things, because that was one of the things that the firm that I was with could do. The other 9 things my firm could not do. And I would have to refer them to other people. But that changed shortly, because I figured out pretty quickly in the Cayman Islands who's who in the zoo down here, who does what. And I found a business partner I could work with, a lawyer in Canada, who also wanted to set up an offshore practice. Sorry about that. He needed an offshore contact that was in the brokerage business and could talk to clientele. I needed an onshore legal contact that I could refer clients to for all the other services they needed to get done. And we found out very quickly we had a symmetry here. But unfortunately, where I was very handicapped, and where he was handicapped. And the best thing to do was for me to leave the firm that I was with, create a consultancy firm instead with my buddy. And then we could handle 9 of 10 things that the client needed. And the one thing we couldn't handle was broker services, but I knew brokers to hand off the clients to. And the brokers were thrilled that we took care of the other 9 things. They were just going, oh, great, I just be the broker, and you and your guy in Canada take care of it. Oh, you and your lawyer will take care of it. And it just turned out that instead of me making 1/10 of the commissions, 1/10 of a living, I could make the entire 90% of 100% of the living from these people. And so my lawyer friend and I, my partner and I, we built a nice little practice offshore through these offshore entities. But I tell you, the 23-year-old was clueless on the other 9 things, because Daddy and the brothers told him what to say and what to do and how to do it, and they were scooping water up with their fingers open like this. They would scoop up water like this, and the water would just flow through their fingers, and they would only get drops instead of handfuls, buckets. But there you go. Now today, here we are in the market. We're down 271 points in the Dow, and we have worrywarts in Wall Street and elsewhere that are 35 to 50 years old, many of which, and almost all of which, have never lived through a normal interest rate environment and have no idea how to handle hyperinflation, hyper interest rates, high unemployment, and a recession all at the same time. Clueless. And they're also utterly clueless as to how to conduct oneself when it's government, the government you are part of, whether you're American, Canadian, British, German, French, Italian, I don't care. When your sovereign government cannot borrow enough money from the markets to cover its deficits easily, I lived through that. I paid attention, and at that time I was 21 to 23 years of age. I paid attention to that, even 17. These guys today never been through anything like it, and they have nowhere to turn for advisory. And so you're going to get these gigantic gyrations of markets, including the fact that we ran up 2,000 points last week, and we could give up 300-400 today, and that is still not a nothing burger. Enough of that. So that's me complaining about those guys. We're down 267. I find it always predictable and humorous. Deep inside, I find it humorous whenever I'm introduced to someone who is, this is my son, so-and-so. I'll have like an entrepreneur introduce me to the son who's going to take over the family business. And I give him the once over, and I can pretty well tell you in a minute or two, pretty quickly, whether this kid has got the chutzpah or not. There are some sons who can take over the family business. Yes, but it is not necessarily the eldest one. Sometimes it's the third one, the second one. Maybe it's the daughter that can do it. There are children who have been tasked with taking over the family, whatever it is, the furniture store, the transmission repair shop, whatever it is, who are utterly unqualified for the position, don't want anything to do with it, have no passion for it, and would rather be somewhere else. But they're pressured under familial pressures to be the one to take this on. The most successful family businesses are the ones that pass on the family business to the sibling that can handle it. And there are those out there who make those fatal mistakes. These parents, these founders, they make the fatal mistake of trying, well, the eldest has to take it over, my eldest son, because that's the way it was in my family all the way along. It's not actually how it works. In any event, it is interesting to see how this works. We're down 12.9 on the S&P. We're down 102 on NASDAQ. The NASDAQ and the Dow are now down about 0.75 of a point, a little better. S&P down a quarter of a point. That's where we are right now. Okay, we're still down 15 cents on Rocket Lab. Not bad, actually. SoFi down 32 cents. That's better than down 50. GameStop still up 217. AMC up down 38 cents. Matterport down only 6 cents. ME down only 11. Spire is up a half a penny. ATIP is up a nickel. SmartRent is up 19 cents. Sixter is up down 14 cents. Pfizer down 12 cents to 54.39. The high today 55.30 on the opening. The low today was around 1 o'clock. Powell's comments at the height down to 53.90 and now back to 54.39. So Pfizer's trying to hang on after it's all said and done is to break even. We'll watch Pfizer all week. Robinhood down 30 cents. Vanek Vector's down 254. Home Depot down 12.30. IBM down 96 cents. Microsoft took a shot lower. It got as high as it was sitting around 300 a share when the Powell stuff came out, and it dropped to 294.90. It's back to 297 on Microsoft. Apple 164.57, up 59 cents. It also took a shot down, went negative, came back positive. Goldman went down and hasn't recovered much. Still down 668 to $338 a share. The high today 346, the low 337. That's where we're on Goldman. Cisco down 16 cents. Facebook off 630. Amazon is up 50 cents. It took a dump too. It was as high as $3,261, dropped to $31.91. It went down 30 something bucks. No, Bruce. It went down $70 from that high to that low in like 30 minutes. Sometimes the Federal Reserve Chairman should just shut the hell up and don't speak. Tesla up $18 a share. Google down 20 bucks. Same problem. It's recovered but took a shot down as well. That is what we have going on here on a bunch of these stocks and markets. So sometimes, like I say, outside forces from left field come in, and whatever they say is interpreted as something dire, awful, terrible, surprising. I don't understand how these morons who handle these trillions of dollars actually think that because Powell and his pals discussed the possibility of raising rates but didn't, that admission actually is a cause to drop a whole bunch of billions of dollars of stock and trillions of dollars of value in a 30-minute window. I consider that to be complete inexperience and immaturity as managers of money. But welcome to the 8-second attention span world in which we're in, where knee-jerk reactions are overreactions, and where the world today is not as mature as it used to be. It is now much more of a teenager's world, and we react like teenagers more and more and more. Rather than sober second thought coming in, we have going on. In other words, shoot first and ask questions later is the mentality. And this is happening across many areas of our society, if you haven't noticed already. And there you are. There's your old man ranting and raving and losing his hair. Uncle Bruce, what would you do? I sold GameStop a $98 strike for this Friday for $5.39. The high got $5.43. Nice stink offer. Already trading at $2.28. Buy back, sell again tomorrow. What are your thoughts? Well, the stock is $93.71. It's trying a little, tiny rally. You don't have to do anything. You could buy it back if you want and score your little trade. Fantastic. What's wrong with that? Nothing. But you don't have to. The Dow is going to end up on the day probably lower. We're 26 minutes to go. We're down 281. And it could well be that we drop 300 or 400 more tomorrow morning to start the day, and GameStop's $91 a share, and you're a genius. You got a $98 strike price. You have till Friday. This contract is worthless. It has zero value. The stock can go up $1 from here tomorrow and still be trading at 228 because it's lost another day of time. So you don't have to do a darn thing. Are you hoping to catch a few swing trades? Why not? I understand. Had you sold this sucker at 7 and we're buying back for 3, great. But again, 539 to 228, yeah, it's okay. But I wouldn't sweat it. I would probably just not do anything and just wait and just dare the stock to go higher tomorrow morning for no good reason. It's the only one that's up right now. Everybody else is red. It doesn't belong here. Theoretically, GameStop doesn't belong here. They haven't said anything. They haven't made a press release. So there you go. But if you're, worried about it, you can jump in there, pick up your contract, buy them back, and lock in your little profit. Great. Wait till tomorrow, opens on a little up dip, or waits a half an hour and then it has an up dip, uptick or something, then right again. Sure. But I would not be worried that the stock's going to go away on you. You are 4.37 out of the money, and you got 4 days to go as of tomorrow. So this contract is on its way to $2 a share soon. If it goes down to 91, it's on its way to 175. If it's on its way to 90 a share, it's on its way to $1.50. So, by Wednesday, it'll be like 110, 120. And by Thursday, stocks around here, it's going to be a buck. But again, you don't have a lot more upside, I guess, is the other way to say this too. If I'm going to use both sides of the argument, if you can buy it back for 250 right now, the argument is, well, you can only make 250 more between now and Friday. That's all you can actually make above what what you got. You only sold it for 539. You didn't sell a $12 contract. I was talking to everybody about selling $12 contracts today. You didn't write a $12 contract. So you wrote a 539. So you limited your upside to 539. That's the most you can make. But that's okay. It's all right. I'm not mad. Now, if it's sitting around 230, 240, and you can get out here, you made about a little over half your money. And, you sold it today. You're buying it back again today. Great. Your idea of doing it again tomorrow? Great. You can do it. I prefer right now you write higher priced calls and take out $5 or $6 or $7 in profits, not 2. But it's all right. So I'm giving you both sides of the argument here. It's up to you to decide. It's 94.03. It's popped a little bit, but don't read into this that it's going to the moon now because it went to 94. It's up 327 on a 273 down day on the Dow. I don't see GameStop going anywhere unless there's something happening all of us, don't know about. I don't know if there is something really going on we don't know about, but totally up to you. You're still about $4 out of the money. Okay. So if you don't get it today and you leave it overnight and we're trading at 94 tomorrow and then at 93 tomorrow, this contract will hit $2 and you'll be able to buy it back at 2. And there you are. Okay. I hope that wasn't too, not too much of a thing. Anyway, too long of an answer, rambling. Okay. Let's see, everybody. Thank you for being here. Thank you. Let's see, $300 in the 3 hours per contract. Again, there's nothing wrong with this trade. There's nothing wrong with it, Mirko. If you've locked it in, nice going. Anyway, there you go. Okay. Storytime with Uncle Bruce must be a thrilling afternoon today. Oh man, the funny thing is about the world in which we live. I learned this way back when I was a young man. I listened to my elders, and I could figure out pretty quick which of my elders was full of crap and which of my elders were really wise. And I liked hanging out with the wise ones. I really liked those guys because they had the best stories that were real. Now, the bullshitters that I had as relatives had great stories, but they were all pretend. It was all hyped and made up crap. Wasn't real. So When I tell you about what's happening in the market today and what's going on with uh, Powell and all that reaction to Powell, I'm now relating to my life to give it back to you. I'm telling you, kids, there is an expression out there about history repeating itself. That expression is real. It exists. It's happening right now in Ukraine. We got a moron in Russia sending in unqualified troops and absolute unbearable equipment on the civilian population of a country. And there's a small defensive force holding him off. This was happening in the 40s. This is happening it happens all the time in the history of mankind. And here we go again. And unfortunately for our friend in Russia, he's not getting the swift and complete and total victory he was thinking of. And what he ends up inheriting, if he does win the territory of the area, that land he gets, if he actually ends up getting it, what does he end up with? Bombed out cities, bombed out infrastructure, electric lines all severed, plumbing all ruined, hospitals all bombed out. In other words, you don't have a society anymore that you've conquered and that you now can take over and off you go. You're now in a 20-year rebuilding mode, which is going to cost you as much money as it cost you to take the thing over. But you're the pariah of the world, and you're not. No one is going to want to deal with you. And so, this happened before. It's happening now. It's going to happen again. History repeats itself. The markets, they do things that they've done before, and I've seen this game before, again and again and again. I've seen this game, and every 10 years or so, 20 years or so, oh, I remember this. I remember this 20 years ago. And you'll hear other historians go, oh, this is just like 1958. Oh, yeah, it's like 1932. And the young so-called next group to take over, they yawn and they go, these guys are boring. They don't know what they're talking about. What they're missing are golden gems of information that someday they're going to be able to use themselves. But my best friends didn't give a hoot about their parents' stories and stuff when they were teenagers. I found that as time goes on, people I've come to know, as they get older, they're really desperate for stories from their parents of what it was like when they were their age. But when we were teenagers, we didn't want to hear it. Don't tell me about walking to school uphill, both going home and coming home. You're always walking uphill with a 30-mile-an-hour wind. That didn't exist. That can't be true. I don't want to hear that. David, hi, Uncle Bruce. I know you like ARRK or ARKK. I'll get it out. This Kathy Wood's Innovation Fund. But I know you also don't like Hood. I know you like the but you don't like Robin. Okay, would ARKK having Hood make you consider reassessing your opinion of ARKK? Okay, so look, ARKK is not a company. ARKK is an ETF. Robinhood is a company. It's a brokerage company. Now, ARKK buying into Hood, which I think they have. They own Hood now as part of their portfolio. Despite that, I suppose, I like Kathy Woods' style, and I like her determination and her long-term thinking thesis, her idea of, I believe the world is being changed by disruptors. And she's right. It's always being changed by disruptors. And she's investing in companies she thinks will be the future of business, of lifestyle, of our world. And okay, she's into Robinhood. Why? Because Robinhood came up with a clever way to help people trade markets in one of these. There are firms who are run a lot better than Robinhood who do this too, but Robinhood was one of the innovators, and they grew out a huge number of people. I think SoFi is a far better investment than Robinhood is, in my personal humble opinion. I think in 10 years, when you compare the success rate and profitability of SoFi compared to Robinhood, you'll go, why was I holding Robinhood when I could have bought SoFi the whole time? It was right in front of me. SoFi I think will eat Robinhood's lunch when it comes to profitability. But SoFi will never take over Robinhood. Why should they? They'll just crush them. They'll just beat them. They don't need to buy them. They'll beat them. And so there you are. Again, ARC I like because of all the different stocks they have. A whole bunch of investments and a whole bunch of stocks in the future of in business's future disruptors. That's what I like about it. Okay, I hope that answered the question. Okay, anyway. Trading of Evergrande, which was suspended today. Hong Kong Exchange, what a surprise! Yeah, Beach Boy. I did mention that this morning. It was one of the headlines I think I read through this morning on the Wall Street Journal thing. Yes, indeed. Interesting stuff. Okay. When is your turn? Uncle Bruce, when it's your time to go, I think I can take over the Bagel live stream. Oh man, let's see here. What else is going on here? Thank you all for being here, popping in to say hello and popping by. Let's see. Let's go. Uncle Bruce, do you have any thoughts on timing for a rollover on Apple 155s that expire on Friday? I wrote it last week and it's just been running on me. Well, Apple is now 164.54. So you're obviously in the money on those, to say the least. Let me get this stock up if I can. Here it is. So we're up 50 cents today. We were only down a little bit at 163.02 today. This is interesting how Apple does not want to give up the ghost, and yet the Dow's off 310 points. Interesting how that worked. Let's go. So you've got options that expire on Friday. 155's got it. All right, so let's take a look here. Your contracts right now are 975 to 995, and they're worth 947 at this second book value. So they're not really trading much over book value, right? Okay. So theoretically, you need to get 980, 990 or more to not lose any money on this rollover, if I say that correctly. Let me take a look at a couple of things here. So theoretically, if we go down the road a little bit here, there we are. Okay. Hang on, April. There we are. There we go. Okay, and then there we are here. Okay, there we are. All right. Well, first impression, first reaction. You could theoretically buy back these 155s at like 980, 990, stink bid them somewhere in the middle of the trade, and then sell 155s for April 22nd. Same strike price. But if you write the April 22nds, they're $11.75 to $12. They have premium. So you could just take the same trade at the same price and leave the strike price alone, buy back these that you got. If you can stink bid them, if you can get them for 980, let's say, and then you can stink bid out the door these 155s for April 22 at like $11.95, you make a $2 gain in your portfolio ballpark, $2 more per contract. That's your first move right there. That's one way to elongate the situation by adding a couple $100 a contract into your account right now. You can wait until the 22nd. Between now and then, look for a dip, and if the stock backs off a bit to 158, drops $5-6, it'll be in the money, but it'll only be in the money $3.50. Might be trading down into the $4.50 range, which means you could theoretically roll again to something else at that time. But you can also wait till the very end. If these shares want to go higher to 170, let's just say they go crazily to 170, well then they're worth $15. Well, you've sold this one for almost 12. You sold this one for about $12. It's now worth 15 book value. You'll buy it back for 15. And then you can write a 155 for a month out again and probably get another $2 on it. Or you could then look at maybe 157.50s or 160s for a month and a half out and get just as much money for them and slowly lift your price. But if I'm, not that I'm right or not, but if the shares back up a little and give up a little ground, because it's not all peaches and cream everywhere we are, and there are more on money managers out there. If this thing backs off to 160, 158, you could theoretically roll from a 155 to a 160, say a month further up and that would be like taking like an $8 contract into another $8 contract, or I'm getting it, so that you are slowly raising your strike price and giving a little more time for it to conserve the cash you got, lift your strike price, and move forward. If you are trying to score a scenario here where you're trying to write a contract where you can bring in just as much money as it's going to cost you to buy this one back, then you have to go further out in time. And you can go to something like a May 20 contract. You can write a 160. That's $5 higher in strike price. And it's a little more money. You'll get about 1075, 1080 instead of, and you're paying 990, 980, 990 to buy this one back. You get about 1070, 1080, about 80 cents more a contract, but you lifted your strike price by $5 to 160. But you have to go to May 20th to get it. That's a possible scenario. And then the next scenario would be maybe June calls. You could write 165s for June, but you're lucky to get 935. And if you buy these back for 985, you're losing 50 cents in cash, but you're moving up $10 in strike price. You don't have to go that far. And frankly, I think the first thing I would do is I would just roll into another 155 contract, as I mentioned earlier, instead, and bring in the extra $2 now, time, have the same strike price. Stock backs off a little bit, great. Backs off $1 or $2, you don't do anything. Stock backs off $5-6 a share on a rough week coming up, goes to 157, 158. Well, contract's worth $2-3 in book value plus time. It might be down to $4.5, $5, and that might afford you the opportunity to theoretically consider buying them back or not, because these are 155s, and if the stock is going to trade at 157.58 with 2 weeks to go on the contract, you might as well just wait for that contract to keep depreciating, because it's going to lose its time value. And then ultimately you'll roll it over for another 155 for 3 weeks further out for another $2. And you're just taking $2 every week or so more money off this stock contract, or every second week, another couple of dollars, putting it in your account, sitting with a 155 strike price and going, okay, you want to hang around here. Right now the stock wants to play between this 150 and 165 range. Okay, let it do so. Did get to 166.35, but no guarantee it's going to go higher right away. We'll see. Okay, I hope that helps. Patience. You can slow down. You don't have to worry. You don't have to be in a hurry. Okay. Let's go. Yeah, living free, definitely. We're talking about options. Yeah, you bet. Check out my website, stockmarkerswithbruce.ca. There's 12 lessons in there for you, how to write options. Learn all about writing options. Okay, thank you. I've listened to so many videos. It's like listening in another language. Rock and roll. Yeah, I try to make it as simple as I can, English-wise. A lot of folks here are writing options on stock they have or stock they don't have. They're writing options on options. So you could theoretically, like with Apple, you could buy an in-the-money option that maybe $30 in the money, $40 in the money, that's got 6-8 months, a year to live. You buy one of those, which is cheaper than buying 100 shares of stock. You might spend $4,000 on a contract, $5,000 on a contract, instead of $16,000 on 100 shares of Apple. And for $5,000, you have one contract, a call. And now you can write short-term covered calls against that call as if it's 100 shares. And you bring in this option money. And you can do rollovers and constantly bring in capital into your account, take advantage of stock dips. Yeah, all kinds of good things. So, yep, there's classes for that I put together. Thank you, everybody, for being here. I just noticed that with Living Free being here, Living Free is not a member of the channel. He's commenting. I forgot to set the button. But it's okay. Welcome. Living Free, it does take time to learn and understand options. Many of us have been here for a year now. When we started, many of us knew very little about options. We're all now writers. We're all option writers. There you go. What do you think about scalping covered calls where you only own the contract for a couple of minutes for like a 10% gain? You're not talking about, you can't write a call and own the contract. You write the call and you short the contract, and then you try to buy it back. Yes, you can play that game. You can play another game. It's called scalping your stock. So you have 100 GameStop shares in your possession. All right, you can trade commission free, and the stock is trading at 97.50 this morning, and you think that it might back off to 96. You sell your stock at 97.50 and put a stink bid in 96.01 to buy it back. You get your stock back, and you've just scored $1.50, and you made $1.50 by shorting your stock by selling it to buy it back. You had it, you still want to have it, so you're going to do this. What I do with you guys is I get you to write call options against your stock because you won't lose your stock that way. You're not shorting your stock, you're shorting a call option with a premium added to it, which is protection to you. You get a lovely little premium, commission-free trades or very little commission on trade. And even if you're wrong, you can make money writing an option. And that's where I try to protect you guys from yourselves where, oh, gee, I sold my GameStop at $96. I was going to buy it back at $95, and it went to $98. So I bought it back thinking it was going to the moon, and it didn't go to the moon. It went back to $95, and I've lost $200 today. What an idiot I am, you'll say to yourself. Where I'm saying to you, oh, the stock's at $96, was 93 this morning. Why don't you write a call option at 98 for it? And write it out for 2 or 3 weeks. Write it for $1,200. Bring $1,200 into your account for your 100 share. And if the shares back off to 90 the next couple of days, and they can, you'll probably be able to buy this contract back for maybe $400, $500, $600 less than what you wrote it for. But if the shares go in the next week and a half to 103, it doesn't matter because you brought in $1,200 on a $96 or $98 contract. You, in effect, are covered to $110. You'll still not lose money if it goes up to 110. And you still have your stock because you wrote a contract against the stock you have at 98. You wrote the contract and you got $1,200 for it. You're covered to 110. You can be that wrong and still not lose money writing a call option. This is what I'm trying to get all of you into. This is the psyche I want you to guys pick up. This is why I do these classes. This way, yeah, sure, okay, that the stock went up $6 in 5 minutes. I had no idea. You didn't get caught. Doesn't matter. You go, okay, let it go. Like Apple's up to 165. So what? Let it go. So what? Yeah, I'll buy these back and I'll write another one. But I'm buying my call back at my stink price, and I'm going to offer it at the stink price. Now, end of the day, I wouldn't do it now. 158 with 2 minutes to go. Not now. This is a tomorrow project if you're going to do that. Okay. We have 2 minutes to go in the day. We are down 218 points on the Dow. And there you have it. We're going to have a negative story today, negative day. But anyway, there it is. What else is going on here? Thank you all for being around and hanging out with me today. Paper Hands Lillian, Gary, how is your cat doing? I hope all's well. I had to bring my cat to the emergency room yesterday, 11 p.m. I'm still distressed out from it. Hello, Uncle Bruce's family. Welcome. Living Free, I'm going to join your channel. Living Free, if you're going to join us, you can join 2 levels. The basic level, $10 a month, or you can join these guys up here, Gold, Bagel, family members. You'll get a trading alert every morning before I start my 8:30 show, and you get a Wednesday night hangout show just with me and Gold Bagel members. You can ask me anything you want about options, trading, and all that stuff. As a perk, as a couple of perks, up to you. Thank you all so much for being here. Anyway, there you go. Let's see. Anti-PC is saying hi. That's nice. How you doing there, NTPC? Nice to see you. Good to have you here. Moonbeam is here. Thank you guys. Thanks for popping by and saying hi to us. Johnny Basic is here. How you doing, man? And fantastic to have you. Okay, there you go. That's our day here. We're down now. I think we're done. Has anyone hit the bells? Larry is not around. Not Larry Titus has hit the bells. Thank you, not Larry Titus. Yeah. The gold bagel is $24.99 a month. It's $25, and for $25, instead of just commenting here on this, you get the morning alert, trading alert, which is about 10 minutes every morning before I start the 8:30 show, where I recap overnight what happened with you guys and let you know what to look out for. Then you get the Wednesday night show. So that's 6 shows a week more than you get as a regular member, and that's about 24 a month more. So for the extra $15, you get 24 added features as a member. If it's up to you, fantastic. Thank you, guys, everybody. Thank you. Charlie, I just got here. Are we rich yet? Oh man. And thanks for the chat freebie today, Uncle B. You're welcome. I actually forgot to set the button today to make it members only. But thankfully, no trolls today. So we survived without getting trolled, because that usually is what happens or can happen. But anyway, thank you, everybody. It looks like 90% of the chats were simply members anyway, but it's nice to see folks here. A 201 drop on the Dow, 201.94. S&P dropped 1.9 points, and NASDAQ 55. A very light day. Nothing bad. We're just digesting the gains. Totally expected. Didn't help that the Powell thing came out, but you know what? Keep in mind that the market may have been looking for an excuse to do some selling, and they used that one-liner as their excuse. I can't guarantee that, but it's possible. Final quotes look like this. Rocket Lab closed to 883, down 24. SoFi lost 30 cents to 957. GameStop ended up at 94.10, up 331. AMC 1587, up 7 cents. It had a nice recovery. AMC, it was down as low as 1528 there for a while. They came back 60 cents in the last 45 hour and 15 minutes maybe. So it had a bit of recovery, but only 33 million volume. It's not that great. It is okay, but it's not unbelievable volume. Matterport down a dime to 817. ME lost 14 to 358. I was looking for a better day than that. Spire unchanged, 198. ATIP down a nickel at 174. SmartRent ended up 18 cents on the day, and Cyxtera powered back. Cyxtera was as low as 11.14 today, around 1:30 this afternoon. And in the last 2.5 hours, it went from 11.14 to close at 11.45 and ended up 4 cents on the day. 373,000 volume on Cyxtera. So there you are. Pfizer landed at 54.19, down 32 cents today, reflective of what the Dow did today. Robinhood down 39 cents. Vanik dropped 63 cents. Almost got back to even. Home Depot could not come back. Lost 11.40 on the day. Did not recover. IBM down 65 cents. Couldn't recover. Neither could Microsoft. It was coming back. Still lost $1.27. Apple did gain $1.40. It was one of the few to go green and stay green. Goldman Sachs still lost $6.35. Cisco up 3 cents. It just came back. Facebook down $5 on the day. Amazon down $4.82. Tesla Amazon up $4.82 and Tesla up $15.77. They eked out a gain. Google down $6.46. Bed Bath Beyond up 93 cents. BlackBerry up a dime. Royal Caribbean down 49 cents to 75.69. Target down 2.98. JP Morgan down 44 cents. Costco down 5.80 a share. Walmart down $1.21. Nvidia up $2.81. American Airlines lost 66 cents to 16.09. And Moderna down 3.55 to 175.38. 175.38 on Moderna, and that's kind of it right there. A mixed bag, but negative on the three markets, the three big indexes: were negative today. And over on the VIX, we ended up with a slight loss on the VIX, which is good because that meant that the fear index dropped to 23.57. So just a little better. So not an ugly day at all. So this snaps the 5-day winning streak for the Dow. This denies another win today on the big markets, but that's a good thing. We actually need a little cleansing here, and then we'll kind of figure out what's going to happen after that. We'll see tomorrow. Okay, there you have it. There's the story, and I'm sticking to it. Not complaining. Thank you, by the way, for 140 thumbs ups on a negative day today. Appreciate that. If you're able to hit that thumbs up button for us, I would appreciate that. And let's see here, some other comments and stuff. Pop Rocks Live. Hey, Uncle Bruce, I'm happy to discover your channel. Just taking the opportunity to say hello. Pop Rocks, buddy, how you doing, man? Thanks for being here. John Clark, have a good rest of the day, everybody. Living free, thumbs ups, man. Bye, Blockbuster. Uncle Bruce, what do you think about writing cover calls against Cigna? How far would you stay out of the money? I don't know the Cigna stock very well. I don't follow it at all. So I really can't give you an answer. Off the top of my head, that would be unfair of me. That would take a bit of research to kind of look into past volatility. How fast does it move up and down? How much in the day does it move? How active are the contracts? There are stocks like Cigna and others where you may find that, hey, I can write contracts on these, but you might be wise to double check before you write contracts, just to make sure that if you're going to write contracts on some stocks out there, that they have a very good open interest. In other words, there's a lot of contracts in existence, and there's a tight spread between bid and ask most of the time. Where sometimes option writers get caught is they'll want to write an option on a call, like on a stock, but the stock has weekly contracts. Every Friday contracts expire and so on. But only the third Friday of every month is there really good volume on contracts. Because in the old days, when I was a young man with very little white hair, mostly dark hair, in those days, we had contracts that were only good for 1 month at a time, and they would expire. So we had contracts that would be a year out, okay? But the third Friday was the expiry date for every contract. There wasn't a weekly Friday expiry way back when. Old habits die hard on contracts for volume. And you'll find, if you do a little look at option tables, option chains, if you take a look at, say, the month of March or the month of April, the month of April, May, and June, forget March, it's over. But the next 3 months, take a look at contracts for expiry on Friday, and take a look at, say, a contract that is right near the market price of whatever stock you want to talk about. So whether it's Cigna, or whether it's American Express, or whether it's IBM, or whether it's General Motors or Apple, it doesn't matter. You'll probably notice that the third Friday of every month, the contracts that are right around the actual market price, where we are right now, there are way more contracts in existence on the third Friday of every month than any other Friday of any month. And you'll find also with that, for example, if there's 1,000 contracts that exist in the second Friday at the market price, there might be 30,000 contracts that exist on the third Friday. You may find that the difference between bid and ask, the spread between buyer and seller, on the second Friday, it might be a 25-cent spread or a 20-cent spread. But on the third Friday, it's a 4-cent spread, a 5-cent spread, 8-cent spread. On extremely active contracts, it's like a 1-cent spread between bid and ask on very heavily active contracts. Third Friday of every month. So if you're thinking of writing on Cigna, make sure there's a strong open interest on whatever contract interests you, and you might limit yourself to the third Friday of each month to do writing, option writing on. Just a little tidbit there. Stuff like that. But if it's a very active stock overall, then you may find that, oh, wow, there's contracts all over the place and they're trading like crazy and they're a good spread. You have to keep in mind, though, that there are times where you need to put in stink bids to buy contracts or stink offers to write them. You have to learn all about that. And that's what my classes are all about. Check them out. Here we go. Uncle Bruce, I'm here. You can begin now. I'm here, says Alberto. Been on the road. Hope you got my bagel PayPal. I got to run. Thanks for everything. Writing cover calls. Thank you. I did get a PayPal donation. It just came in about 20 minutes ago, and I was yapping away. Thank you again, as always, my friend, for your donation on PayPal. Those of you who make donations to my channel, you guys are the best. I love you guys. You're awesome. It keeps Jennifer and I going. And we do really prefer donations through PayPal rather than Super Chat. Although a Super Chat donation is always great because it shows up here on the chat as a brightly colored thing. But those PayPal donations for, whatever the amount is, 96% of whatever you're donating to us comes to us if you do a PayPal donation. The link is down below. If you do a Super Chat, we get 70%. 30% goes to the mother company, and we only get 70. Whereas with PayPal, we get 96. So we really appreciate it when you do that. Again, it's all totally a volunteer thing, and we love you for it. Thank you. Okay. Yeah, the Cred Savage, that was last year. Seems like so long ago. The wife and I bought GameStop, SoFi, Matterport, Lucid, Tesla, and have not stopped writing covered calls since. This is the way. Vacations are even cheaper now. How about that? Formulous guy. It sounds kind of like my varmint. I found him on the side of the road on the way to church one morning. He either got hit by a car or attacked by a hawk. I don't know. He only lost his tail though. Right on. Let's see. I'm so excited. It says living free. Right on, buddy. Let's see. What else is going on here? Let's see. Credit Savage. I'm now thinking about buying some Boeing since they had that accident today and the knee-jerk reaction was for people to sell. Good opportunity to buy some Boeing options for August or September down the road, cheap in the money. Write covered calls against them. Yes, poor man covered calls is what we're talking about. Hey, Uncle Eddie Q, what's going on, bud? How you doing? Nice to see you. Take care. See you later tonight. Thank you, Duncan. I'll see you on the other channel. Traveling with Bruce. I'll see you guys later over there. Kent, wrote, bought back. Easy 325 on GameStop today. Kent, I don't know you anymore. I just this is so. Kent used to be such a scaredy cat. You used to be so nervous about doing it. Yeah, you're a pro. I love it. Kent, way to go. Say hi to you know who and keep your head down. Beautiful. I love it. Gowdy, this winter he gave me a scare when his bowels and urinary tract got infected. I think we're talking about pets on my channel. It's okay. Bruce, is it worth buying 50 more shares of GameStop so I can write options? Yeah, it would be probably worth it. Yeah, I would say yeah. Nice. I've been waiting to earn money each day, a small income to pay my bills. I've been so scared to sell my AMC. Oh, yeah, you can write calls on AMC, man. Oh, absolutely. Easy money. Let's see. Yeah, Johnny Basic is saying, living free, just take it slow. Put a small amount of your funds in at a time. Thank you, Johnny Basic. Happy to have found actual help on a YouTube channel. Right on, living free. Glad you're here, buddy. Gowdy, living free, you'll be able to write against your shares without selling them and to do so in a way in which the chance of you being exercised to lose your shares is very low. Because as a writer, you set the rules. And of course, you don't lose your shares. You get bought out at the price you set. You just turn around, you buy them back and keep writing. You never stop. Uncle Bruce, when is averaging down not catching a falling knife? Well, sometimes you buy too soon when stocks are falling. And other investors are patient. They kind of wait and go, I want to buy that SoFi, but let's just see how far is it going to come back. If it comes back a little bit on the other side and then I buy it, hey, I missed the last couple of cents. But is this the end of the world? No, I saved dollars and I missed pennies. Okay. I can do that. I can do that. For my entire life, if I play this game, I will be the one winning. Exactly. Gowdy, Mark, I love writing cover calls on GameStop. I recommend it. And let's see, Johnny, that's the advice I would give to a 6 month ago me. Oh my gosh, I'm so happy. Says living free. Farmers, Coyote, yep, he was one Purina. Okay, we're still talking pets. I see SoFi will allow option writing soon. Yes, it's coming. It's coming. It's coming. It's coming. Let's go. Let's go. Let's keep going here. Coyote, living free is a gold member. Check out the Wednesday primetime show replays. No market at night, so we often get into deeper and non-nuanced hypothetical writing scenarios and such. Yeah, the Wednesday night, 8 o'clock Eastern time, I host Prime Time with Uncle Bruce for Gold Bagel members only, and it is a really it's a great show because I don't have to pay attention to the Dow Jones, the Nasdaq, any headlines. I can just talk to you guys about what did we do today, what did we do yesterday, what are we going to do tomorrow, and I can get into all kinds of ideas with you guys on how to write contracts, how to what to look for, what to avoid. What I try to do on this channel, for those of you who aren't here very often or who are here tonight simply because you can comment, is I try to get you to avoid making mistakes. That's my main thing. If I can keep your mistakes to a minimum and minimize your mistakes, that's half the battle right there. And now the moves you make are going to be winning moves and or very strong, educated placements of wagers that are winning moves. Writing options is a conservative strategy. It's not risky. Risky is buying options. That's risky. That's the gamblers. You're going after the gamblers. You're offering gamblers an opportunity to gamble on your stock to pay you an admission fee to gamble on your stock. That's what option writing is. It's very conservative. It's done by every mutual fund, pension fund, hedge fund, big banks, major investors, billionaires, millionaires. It is done all the time by very sophisticated, seasoned investors who are here for a long time. Option buyers are here for a short time. They're like a vacationer in Las Vegas. They come in on a Thursday night on a long weekend, and they have to go on Monday to go back home to get back to work on Tuesday morning. And they're in a hurry to gamble. And what you want is to service these people. You want to allow them to have them give you their money to gamble with. And they're quite happy to take less back when it's all said and done because they expect to lose. That's what happens in Vegas. You expect to lose money, and as a casino, which is what I'm turning you into, you're the entity taking in the cash, giving pennies back from the dollars you collect, and saying, "Thank you, sir. May I have another?" And we play this game all the time, and it's juicy. It's really juicy. Anyway, there you go. Okay, I will says living free. Right on. George, I'm thumbs up 156, Bruce. Thank you, buddy. Vernon, don't forget to give thumbs to bros. Yeah, I don't want to say lose your shares, but you two only allow so many words, so I couldn't fit it in. It's all good. Brian Ham, buddy, thank you for number 158. Thanks, man. Appreciate it. Splair, have a good night, y'all. I hope for a strong Tuesday chart. Assign the UBI average index now is sitting at 657. A year ago it was 1211. We got to get those stocks up, man. They've got to come back. That's all there is to it. Thanks for the public chat today, says Paper Hands. Hey, thank you, Paper, for being here. Brian, you could do that for almost every stock and it would be similar. The markets have been bear since November. That's true. Anyway, go to Paper Hands. Lillian Laterman, good to see you, and I hope there's good news for your cat and you. Take care. Let's see. Tesla to the moon. 2 new factories. The moon beam. Uncle Bruce, thanks. Great advice. Miss pennies, save dollars. Yep, that's right. Your choice will cost. Your choices will cost or pay. It's really up to you in the end. Living free, yes. Right on. Thank you for your work, Benway says. Thanks, Benway, for you being here. Appreciate it. All of you, thank you for popping in today and seeing us. It's great to see you. Mondays are always a busy day for me. I do the first show before 8:30 in the morning for gold members, and I do the 8:30 show for 3 hours. I do this show for an hour and a bit. Then I do 2 more shows on my other channel. So I got to get going, and I'm going to set up my 2 shows now for Traveling with Bruce. You're welcome to join me there tonight if you like. At 8 o'clock Eastern Time, anyone can pop in and say hi. We're going to talk about cruise ships and traveling. That's what we do on Traveling with Bruce. And I'm going to be talking about my trip coming up to Europe. Jennifer and I are looking to go to Europe, and we're scheming now. So I'm going to fill everybody in over there on what we're scheming on doing, and looking for advice from people and see what you guys think about it all. Will it affect your AMC stock if it squeezes during us doing the covered calls? Will it affect if it squeezes a living free? If you're going to write call options on AMC, once you figure out how this is done, if you stick around with me long enough, you're going to learn how to do this. You're going to quickly realize it doesn't matter if there's a mother of all short squeezes or not. It makes no damn difference. You're going to make money no matter what the stock does and how it does it. If you're a educated call writer, you're going to make money no matter which way the market goes. And even when they go up, the shares go up, you do what are known as rollovers. I've done classes on rollovers, and my viewers here make nothing but money. So stick around, enjoy the show. So Blair, Uncle Bruce, one question maybe you could answer before I'm out. Is it possible to write options on stocks with less than $20 or only $20? No, you can write options on anything you want. If you want to write an option right now on 23andMe, you can write $5 call options on 23andMe. The stock is at whatever it is here, to something, $3.58 a share. You can write $5 call options. The problem is that if you write a 1 or a 2 month call option on a $5 ME, you're not going to get any money. You're going to get pennies. Now, some of you have small commissions you have to pay whenever you buy and sell a contract. And if you don't get at least a dime or more, you don't make any money. It's all eaten up in fees. Keep that in mind. Now, on ME, theoretically, you could write a $5 call for a year from now, like, next January or next June, and you'll get something for it, but now you've tied up your stock for an awful long time. But no, you can write on any stock. If the options market exists, you could do anything you want. Yeah. Nice chat today. I love the discussion, says Coyote. Woke me up from this drowsy Monday. Thanks. I'll see you tomorrow morning. You bet, buddy. Splitter. Okay, probably won't see it till see you again. Have a good night, you all. Take care. Living free. You can always roll your contract over, but I wouldn't worry about a squeeze. Coyote. You can write cover call daily, weekly, or you can sit and think there might be hypothetical squeeze around the corner and make zero in the meantime. I've held 200 GameStop since February. I write covered calls on it now. Coyote Feb 21. Splurt. Yeah, I remember you only mentioned that it's more effective for gaining money. Yeah, $20 or over, the premiums start to add up to some money. An $8 stock and writing a $10 contract, you're dealing with a 20-cent contract, maybe $23 a contract. It's you're wasting a lot of your brain power for pennies. I want you to make dollars, but to each his own. Sounds so much smarter. I'm holding since last January. Gotcha, buddy. Brian Coyote, do you have any DRSC? I have no idea what that is. Spirit, then I should earlier start with that. Great, thank you. Coyote, Brian Ham, no, I don't DRS. Okay, there you go. Okay, guys, thank you for being here tonight. Those of you who want to really learn about becoming an option writer, you got to go here, right here, stockmarketswithbruce.ca. That's my website. The CA stands for Canada, just so you know. So stockmarketswithbruce.ca. You'll see my picture on that site. And up here, there will be a tab that says classes, probably says classes. Click on that, and you will see a selection of 12 classes I have created that I did live, the students of which are right here in the comments section, starting last June. We started these classes June, July last year. Each class is about 2 hours long, roughly. And there's Q&A in there. It's a live presentation. You just see me, you only see me, and you see a whiteboard behind me where I make examples of option trades, and I go into everything about options. And there's 12 lessons, and you take one at a time. It's $100 to watch these. So you can watch it as many times as you want. Pick up these classes one at a time. Check them out. and rewatch them if you like. If you have any problems with any of the lessons, let me know. You can't get it to work, you lost the link, send me an email. That's on my website too. You can always send me an email. I'll figure it out for you. And learn how options work. And take your time, do a class a week, 2 classes a week, whatever works for you. Whenever you got $100 and you got a couple hours and you want to learn more about option writing, take the next class. Take the next class. There's no mandatory, you must take them all routine here. You can watch whenever you want, whichever one you want. I recommend you do them all, but this is not a race. This is the rest of your life figuring out how options work. And then we'll go from there. Class number 13 is under construction right now. I'll let you know when it's ready to go, and then we'll set up the next class. Okay, guys, there it is. Thank you so much for being here. And I appreciate you all popping around. And let's see what's going on. There you go. There you go. There you go. There you go. Anyway, thank you everybody for being here today. Have a great evening. Stay healthy for me. Join me tomorrow morning, 8:30 Eastern Time is when I start the show. Whether you're a member or not, I'm starting. And we'll get on it and we'll see what's going on. Okay, thank you. We'll talk about the classes more tomorrow, about what I've got in mind and that kind of thing. Okay, guys? All right, thank you so much, everybody. Austin, thanks, buddy. You have a good one. We're watching that Pfizer. We're watching it. Okay, man. You guys take care. We'll see you tomorrow morning, nice and early. Goodbye, everybody. Take care.